morning. Welcome to CurrencyChange Daily Markets Update on the Friday, 20th of September 2013. My name is Laurent Guilbaud. I'm the Managing Director at CurrencyChange.com, low-cost solution for international payments. The Reserve Bank of India raised the benchmark lending rate by 25 basis points to 7.5%, defying expectation of no change to monetary policy, with a currency suffering since for most of the year. Yesterday, the market was very quiet, and the next big event on the agenda will be next week in the US, as Washington, D.C. tries its worst to avoid a US government shutdown and raise the US debt ceiling. Potential US political drama in dealing with the US fiscal issue is one of the factors behind the Fed decision to delay tapering, and it is yet to be priced in by the market. A political flare-up could see the US dollar come under pressure and weigh on risk currencies to the benefit of the euro. The US dollar managed a modest recovery through yesterday's session after the sharp sell-off after the FOMC last Wednesday night. In the US, we had yesterday weekly jobless claims, which were lower than expected at 309K versus 330 estimate, and also US August existing home sales were higher than expected at 5.48 million versus 5.25 million. In Europe, although the latest Berlusconi affair has effectively been swept under the carpet for now, the market faces a more pressing prospect of this Sunday's German federal election. While a continuation of the Merkel-led CDU-FDP partnership will be the easiest outcome to the market to take on board, the potential presence of the new FDP party is serving to complicate matters somewhat. Were this later party to enter the Bundestag with 5% of the vote, it could effectively scupper any potential groupings other than a grand coalition between the two major centrist parties, which are CDU and SPD. This would potentially mean 2 months to create a grand coalition, leaving the current government in place amidst little effective change in official German attitude vis-à-vis the euro area backdrop. In Switzerland, the Swiss National Bank left the floor unchanged yesterday at 120 on euro Swiss. The currency pair is presently at a key support level around the 200 days moving average at 123. The euro-dollar corrected slightly from its high after the FOMC yesterday, but has fallen back less than most other currencies. This underlines the euro status as a risk-positive currency when equities rally, and this is likely to remain the case as euro-dollar forward points continue to be affected by move in risk appetite. In the UK, Bank of England declares that UK growth may be becoming self-sustained, but the recovery is still embryonic for the UK. Another key point, the London property market, a favoured refuge for financial itinerants that we all are in Europe, keeps on rising, caught in an unusual swell of supply-demand imbalances. Although home prices never adjust as quickly as their fixed income equivalents, it is likely that this divergence of fortunes will be maintained. UK home prices in July rose 3.3% year-over-year, and in London they surged 9.7%. Live exchange rates were live on sterling dollar 160.43, sterling euro 118.50, euro dollar 135.15, sterling Aussie 171, sterling New Zealand 194. Sterling dollar corrected yesterday due to news that US retail sales unexpectedly declined by 0.9% in August versus plus 0.4% expected. Sterling euro weakened on profit taking after a strong rally for days. In terms of economic agenda, today there is very little news. The key figure is only at 3 o'clock UK time. Euro consumer confidence shouldn't move the market too much. If you require further information, please do visit now CurrencyChange.com, where you can register for free with us to open an account, or you can contact us on +44 or 2073 73 2686. I wish you a very nice day.